All right, we're talking about the history of silver. I'm giving you a rundown here on where the silver and gold markets are today. A little current events here and a little history at the same time. Now, the guy that wrote this article here, his name is Jeff Nielsen. Probably a bigger, better, more all-encompassing source of information on silver will be from the Money Changer. The Money Changer. That's a guy named Franklin Sanders. I think if you went online you could find the Money Changer, and he wrote a book, a manual, on arbitrage. He's the only guy that I know of that's ever done this. Arbitrage. Arbitrage is where you take advantage of the difference in price of a particular item, and you buy it at one time, or you buy it in one place and then you turn around and you sell it right away in another. An example of that would be, let's say that the price of gold on the Tokyo Exchange is $938. And just for the sake of our discussion, let's suppose that the price of gold in San Francisco is $940. See, there's a $2 spread there. Well, if you had an account in Tokyo, and you called your broker in Tokyo and you say, hey, sell me 100 ounces of gold for $938. And your broker says, well, okay, Tom, we'll do that. You're on $938. Okay, so now you've got 100 ounces of gold in Tokyo, right? All right. So now you turn around and you call your broker in San Francisco and you say, now, broker in San Francisco, I have 100 ounces of gold in Tokyo, and I want to sell that 100 ounces to you for the $940 that you're advertising there in San Francisco. And the broker in San Francisco says, well, yeah, I'll take that. I'll take that contract for $940. So you just bought it in Tokyo 5 minutes ago for $938. And let's say it's 1,000 ounces, so take a number. Well, then you've just made a $2,000 profit, haven't you? Well, less commissions. See, there's going to be some commissions on this. So the spread has to be bigger than the commissions, but that's what arbitrage is all about. It's simply buying at a lower price and selling at a higher price. Now, it can work the other way around. I mean, you can buy the gold in London, in Tokyo for $938 and find out that the price suddenly dropped in San Francisco to $935. And you lost $3. I mean, it works both ways, but arbitrage is where you're trying to make a profit off of it. Now, the historic price of silver is 16 to 1. So when we see the value of silver and gold go to 16 to 1, which today it's at about 70 to 1, 60 to 70, it's been running in that range now for the last several months, since March anyway. We take a look at that and we say, well, the ratio went up. Now, I've been telling all of my listeners I expected the ratio to close from a low of about, 45 to 1 here not too long ago, a few months ago, a year ago, to 16 to 1, and lo and behold, it went in the opposite direction. It went from 45, it went up to 70. So when it hit 60, I went out and bought some more silver. That's what I do. When I see the ratio up high here, I buy silver instead of gold. And that's because I'm expecting the gold-silver ratio to go down to 16 to 1. And so, and I'm not speculating. See, I'm an old man. I don't have the resources, and I don't have the, I'm not a multi-millionaire. I'm not a Donald Trump. And I'm just like you are. You got my savings, and I've got a choice to make. Should I store my savings in real estate? Should I store my savings in my 401k? Should I store my savings in $100 bills under the mattress? Or should I store my savings in copper, platinum, palladium, gold, silver, wheat, corn, beans, honey, oil? How do you want to store your wealth? In your business, maybe. A lot of people do that. Stocks. Bonds, people buy stocks and bonds. So if you're listening to me, you've got your savings tucked away in some kind of an investment, and you believe in that investment, or you wouldn't have your money there. I was talking to a guy the other day, and he said that his estate, his inheritance, is tied up in stocks and bonds, and his mother, who's in her 80s and one of these days is expected to die, is going to leave the estate to the children, and the children are going to inherit all these stocks. But these stocks have gone down in value by 40%, from 14,000 on the stock market here a year ago a couple of years ago maybe now, down to 8,500 yesterday, and it's expected to go down to around 4,000. It's gonna drop another 50 or 60%. At least we're expecting it to. And so what's that going to do to his inheritance? Well, it's going to make it substantially less. It isn't going to wipe it out, but it's going to go down by 80%. Now, in 1929, stocks dropped 89%, so you had 11% left over. Now, of course, most people would take a look at gold and silver and say, well, I'm not going to buy any of that stuff. I think that stuff is just, nonsense. Well, to each his own. I'm not here to persuade you to sell your stocks and buy gold. That's not my thing in life. I'm a reporter. I just report facts. And then if you take those facts and then you run those through your brain, your computer, it should give you a conclusion. You take a look at this and you draw a conclusion. You say, well, what should I do? Stick with my 401k? Now that the president has put out another $29 trillion worth of money in circulation and guarantees, when that hits the marketplace, is that going to make my purchasing power in my 401k greater or lesser? No, these are decisions that we all have to make. My conclusion from my computer is that it's going to make your purchasing power lesser. That the $1,600 you put into your 401k in 1955, if you look at it today, it has depreciated by about 10 times. If you take a look at the value of the American dollar compared to 1930 and today, it's lost 98% of its value. And the president has just tripled the amount of money. Well, it's 13 trillion, let's see, 20, no, he's doubled the money supply in the last year. In less than a year, the president and our Congress has doubled our money supply. So that should make the money that you had last year and the year before, and as this inflation and price increases on out into the future here, another 18 to 36 months, it should make your money worth about half as much. You're going to lose about half your purchasing power in your 401k or in your passbook savings account. That's what my computer is telling me. So I said, well, I don't think I want to store my savings there then. Now, in a world with twice as many people, now that's today, so we had twice as many people today. And with an ever-increasing number of uses for silver, we have 90% less silver to divide among us. Now, how can this possibly make silver less precious? All right, now, I'm getting ahead of myself here, but I wanted to point out that there's 90% less silver available to us today than there was 50 years ago. Now, let me give you those numbers. Get your pencil out here, boys and girls, and write these down. Now, remember, one of these applications has been discussed by numerous precious metals commentators, myself included, and that is silver is being consumed literally. Thus, every year we permanently lose large amounts of silver, and permanently after the supply ratio between gold and silver. Polyester sportswear already consumes 1,200 tons of silver per year, which is 32,000 ounces per ton, works out to over 38 million ounces of silver that's permanently consumed every year in that one application alone. So to put this into context, there are supposedly 600 million ounces in total global inventories at this moment That's a 16-year supply for just this one industrial application. And silver has already been sold out into the future, 600,000 ounces a year. Is that what it is here? Yeah, 38 million ounces of silver is permanently consumed every year in this one application. There's 600 million ounces that are in the warehouses total.